Hi everyone, welcome back to another episode of Charting Markets with Jeremy. For today, let's take a look at the US equity markets, specifically the Nasdaq 100. After seeing the sell-off prolonging over the past few weeks, probably it's worth to take some time again just to reassess where the possible support might be and where the general market might actually find a bottom. So right now, I think the overall sentiment is pretty bearish, mainly due to the geopolitical risks coming through from Russia and Ukraine, where we have been seeing escalation after escalation playing through. So pretty much that has been dominating the market sentiment over the past 2 weeks, and it seems like we are not seeing any signs of change in terms of the geopolitical arena right now. So all in, you can see the bearish price action especially this week, have actually broken some key support level. And probably right now, I'll just highlight some key observation that we have looking at the charts. So very firstly, looking on the longer term time frame again on the weekly time frame chart. Key thing to point out right here is if you were to look at the Nasdaq 100 index in relation to the blue line, which is the 60-week moving average, we have just actually broken below the 60-week moving average last week over here. And since the break below the 60-week moving average, the general momentum has actually accelerated to the downside. And it does look like there is further pressure to the downside that could play out, mainly due to the fact if you were to look historically when the Nasdaq 100 index actually breaks and close below the 60-week moving average, we tend to see the selling pressure actually accelerating over the next few months out. So two good examples over here which we managed to actually identify. The most relevant one will be during the COVID pandemic in 2020. You can see when the Nasdaq 100 actually closed below the 60-week moving average over here in early March. It actually resulted in a further sell-off, and in fact the drawdown following the 60-week moving average is around 17% from that perspective. And similarly, another good example would be the one over here back in 2018, 2019. That was during the quantitative tightening period in the US, where the balance sheet started to shrink. And you can see the corresponding movement when we actually saw the Nasdaq 100 breaking and closing below the 60-week moving average back in November of 2018, actually resulted in a further drop of around 14%. So just having that as a benchmark, you can see right now, if history repeats, then there is a high likelihood that we could see a similar drop of around 14 to 17% from the 60-week moving average level. And that would actually bring us to this support level of around 12,200 points, possibly being this floor for the long-term uptrend and possibly the base for this overall movement here that we would expect. So what this means is possibly, at least in the near term, maybe for the next 2 to 3 weeks out, there could still be further downside here in the markets. And until we hit the levels of this support at 12,200 points, which we think is the floor right now, then probably until we reach those levels, then we will actually see some rebound or some sort of a bottom playing through for the general markets. So that is one point to note, probably from a longer term perspective, that could be further downside. And then if I were to point attention right now to the daily time frame chart, this also continues to further support for the support coming in at 12,200 points, possibly being the floor. So as you can see right now, if I were to plot the peak to trough sell-off from the current level, we have actually seen the Nasdaq 100 falling around 21%. And this is actually something concerning because during a normal functioning bull market, we shouldn't really see a drawdown of such magnitude. And what I mean by that is if I were to zoom out, you can see during the recovery phase from the COVID-19 lows in 2020, the general bull market actually traded pretty nicely in an uptrend with sell-off ranging from around just 10% to 14% max. And we didn't really see such a big sell-off like the one that we are seeing here right now, down about 21%. So historically, when we do get a sell-off in the magnitude, it's usually in periods of market turmoil, which we can kind of draw your attention again very quickly back to the two examples here. mainly the one during your COVID pandemic, which led to a 32% peak to trough sell-off. And then another similar one, which is the quantitative tightening period of 2018-2019, which the Nasdaq 100 fell around 24% from peak to trough. So again, using that just as a benchmark, probably this time around we could see a similar drop around the range of 24 to 32%. And that will probably once again pinpoint us towards this support level at 12,200 points being the possible base, possible floor for this general long-term uptrend. So if I were to plot this level over here, you can see if it actually falls to the level of 12,200 points, then we will actually see a peak to trough sell-off of a range of around 27%, which fits in pretty nicely to this range of a 24 to 32% sell-off level that we saw back in 2018 as well as 2020. So all in all, I think right now, again, purely just looking at price action, you can see there isn't really much sign of reversal just yet. In fact, the momentum is rather weak. And just looking at price action, it does look like there could be further downside here in the near term. Again, support level that we are watching here very closely right now is probably another 7% downside here over the coming weeks, down to the support of 12,200 points before probably seeing some stabilization, followed by possibly a rebound back up higher. So that would be the levels that we are watching here in the near term. And right now, only silver lining that we can be kind of seeing right now is the RSI is right now back in the oversold level. With the sell-off here, you can see the RSI right now has actually fallen to a low of around 29. But again, for this to actually turn around, we need to see some reversal signal first before anything can actually formalize in terms of forming a bottom. So near-term wise, I think even if we were to see some sort of a rebound higher, the technical rebound will likely be capped by the overhead resistance here at 14,000 points. So that is the general price action that we see. And again, just to hit home the point why we think 12,200 points could be the floor. This used to be a key level back in the day of 2021 last year. 2020 as well, where it used to be a resistance level here in October, November of 2020, and then as well as a support level here back in March of last year. So possibly this time around, if it does fall to this level of 12,200 points, then we do expect this to actually eventually lead to some sort of a stabilization followed by a rebound. And in terms of a trajectory that we see in terms of the near-term movement, possibly it will look something like this. And probably this would be the price action that we see playing out over maybe the next 2 to 3 months out, where it would try to consolidate around this support of 12,200 points. Yep, I think that is all we have today, and we'll see you guys in the next one.